Good afternoon. You're with us on Closing Bell. But before we get you more on the market action, let's straight away head across to the CNBC-TV18 Budget Town Hall, where, of course, Shireen is there with a whole host of industry experts. Over to you.
Corporate India feeling about demand, about growth?
So I think the mood is quite positive, it's optimistic, and that's reflected also in the CEO's internal surveys that we do on business confidence. It's in fact significantly higher than what it was the same period last year. So the outlook on growth, on investments and jobs is certainly positive. And it's also, the performance of the economy last year and high frequency indicators are also reflective of this trend. And of course, as you know, that nation building or economic development is always a journey. So there are lots of positives today. And the model of growth of inclusive growth, which is investment-led, empowerment-led, has, I think, certainly been validated. And I think that journey should continue because economic development is always a journey. And of course, there are additional areas that would need to be addressed as we go forward. Overall, very optimistic, I would say.
Very optimistic is the mood at this point in time, but specifically as far as consumption is concerned, and I link this to the rural economy as well, Mr. Puri. What's the sense that you get on consumption? I mean, FMCG volume growth, for instance, has not kept pace with the kind of GDP, headline GDP number that we've seen, and that has raised questions on why we're seeing this divergence or dissonance. How do you read that?
No, that is true. As I said, there are still areas to be addressed. And we have to also, when we come to consumption, I think it's also important to step back and look at it from a global perspective. Consequent to COVID, we have seen the cost table, and a lot of it because of external factors has actually gone up. And because of that, there is a challenge on consumption across the world. In many economies, including proximal economies, you will find that it has shrunk and not even come back to pre-COVID levels. In India, well, we are comparatively better off. We are not what we would like it to be, but we are better off. And we are now questioning the rate of growth. The rate of growth is muted. That's the question in our minds. And you're right, that is the reality. So what are the ways to attend to this? I think, first of all, as far as rural is concerned, given that cost of everything has gone up, what CII is recommending is that the amounts through direct benefit transfer, the amounts through Manrega and income tax at the lower end, below 20 lakhs, there should be some relief in, and all the other areas should be increased. As far as infra spends are concerned, we are also talking about, putting greater indexation to spends in the rural area. Then, of course, to solve the rural angle on a more sustainable basis, the issues of both agriculture and empowerment of rural economy through skilling, etc., which skilling, of course, is a joint responsibility that industry also has a role to play there. I think that has to be addressed. And as far as agriculture is concerned, I think a lot of policies of collectives, technologies, clusters, they're all the right tools. We have to scale this up and very aggressively start working on building resilience, because the biggest culprit at this moment in the recent past on rural incomes has been the weather events, which are of course favorable now, so hopefully it should get much better going forward.
And we're hoping that the monsoon deficit will be bridged. But before I get Sanjeev Bajaj into the conversation, a quick headline number from you. What if you expect that volume growth will pick up? What could the industry-wide, FMCG industry-wide volume growth, average volume growth be in the second half of the year?
No, that's difficult. That's difficult to answer.
That's why I said industry, not pinning you down to ITC.
No, even for the industry to put a number is very difficult. But we do expect that with the monsoons being better and the cumulative impact of all the investments that are already happening in the economy. See, private investment is also happening. Jobs are getting created. public capex is happening, though
Right.
during the the election period there's been a little lull, but it's picking up again.
Right.
So all of this cumulative impact will boost consumption. It will
Okay.
definitely go up, but very difficult to forecast.
Forecast a number. Sanjeev, let me come to you now as far as growth and demand is concerned. The regulator, the RBI, certainly seems to be concerned about unsecured loans and unsecured lending, and we've seen several measures coming in from the regulator on the back of that. How are you seeing the landscape at this point in time, both in terms of what's happening with credit offtake, and perhaps do you believe that the industry is prepared for more regulatory action?
So the first point is, when you look at non-food bank credit, we are about 16-17%. So that is gradually growing, and that's a positive. Where it comes to small value unsecured loans, we saw a significant growth in this in the last couple of years. And I believe that the RBI has taken the right steps in trying to control that. I believe that associated with it, we've also seen in the F&O market significant increase in small value transactions in the last couple of years, which means part of this money could be used for speculative purposes, and that does not help anybody in the short to medium term. So some of these checks and controls are required, but at the same time, the regulators, we know, have an equal role to support growth as well. Let's hope for a good monsoon. We are starting to see better growth in rural India, at least in our businesses, compared to the last 4 or 5 quarters. The last quarter has been better. But yes, we need to get this cycle of growth, of private capex, of demand and jobs to move to the next level of acceleration.
Any concerns around, what we are seeing, for instance, as far as MFIs are concerned, concerns building around NPAs, around delinquencies? Any concerns that NBFCs at this point in time are seeing? Any signs?
At an MFI level, well, our own presence is negligible there,
Yeah.
but I don't see or hear of a sector level issue. If it's an individual company issue, it could be.
Okay, so your big expectation from the budget, I know there's a long wish list that's been sent in to the finance minister, but if I were to ask you to taper that down to the top 3, what would those be?
The first, very clearly as India, we are in a position where we have a significant chance over the next 5-10 years to partake in a larger part of the global economy. Our last 5 years have seen the early benefits of schemes like the PLI scheme. There have been some mistakes along the way also which need to be corrected. I hope we see a version 2 of that, and while we know the budget is for the year, but I hope there's a direction for the next 5 years. What industry needs is a clear glide path of what to expect over, say, the next 5, even 10 years, so that they can invest with confidence. Second, around jobs, having jobs and skilling. We were just talking to somebody over lunch, and you can't get people because most people have gone home, and how do you get them back? I think this is another big challenge for industry. Third is around skilling, and I know the government is doing a lot as private sector.
Gone
We will work with
home,
them.
meaning gone home for what reason? On account of the elections, or
Gone home for elections, gone home because...
do they not
last-
feel, there is enough opportunity back home and hence they don't feel the need to be here?
So, post-COVID, what has happened is partly the additional amount of money that came into their hands when they needed it at that time, going back and living in those means, we believe that a lot of people have just got used to that. And bringing them back into the city is taking a disproportionate effort. But that needs to be done. How can the government support industry for doing that? We also know that very often for industry, there's a gap in skilling between what you learn out of college and what's required at work. Now, each of these are areas where work has been done.
Right.
Question is, how do you turbocharge this to the next level?
Okay, so that's interesting. So you're saying schemes like the free food scheme, etc., are now providing enough of a cushion that people are considering staying back in villages as opposed to coming to cities looking for a job. That's an interesting point that you make, Sanjeev Bajaj. But let me get Mr. Mukundan into the conversation as well, because Sanjeev also alluded to the PLI schemes, and we have 13 PLI schemes in operation. As part of the 100-day agenda, we're given to understand that from a manufacturing perspective, the government could perhaps be looking at even additional schemes, new schemes, not PLI, but things like medical device manufacturing, etc. What would industry be hoping for that this budget takes forward?
So, Shireen, I think rather than get into PLI straight away, let me go to the broader issue which you raised. I think I've traveled to almost 15 cities in the last 1 month, part of CI, met the members. There are 4 issues which comes again and again whenever you go. One is the jobs issue, second is the skill issue, which I think Sanjeev alluded to. And then there's an issue which MSME is raising in terms of, that demand and how do we sort of support them. And while that support is there, I think we need to look at the broader environment and say, how do we link it to our trade policy? How do we enable them to serve the world market? I think that 4 key pivots have to be done. Don't just rely on Indian market demand growth, but rely on our connectivity to the world, become part of the global supply chain. And in that, PLI has a big role.
Right.
I think we got to link it to those sectors which are going to be very, very strategic in becoming part of the global supply chain. Put your money there and then enable the MSME to become part of the value chain. It creates jobs. But of course, the skill issue, the government has done a lot, in my view. If you look at the new NCVT guidelines, the credit guidelines which have come out, but they have just come out about a month or 2 before. We need to still operationalize them. So a lot more focus in making them operational. And then getting a focus back on the general good, which is basically to say, don't cut back on your public investment.
Right.
And hold on one issue which I think maybe will serve as at least for the next 2-3 years, this 15% income tax sunset clause.
Yeah.
If you can push it back by another couple of years or maybe give it a 5-year push, I think it's going to play extremely well. The external environment is positive today. If you look at the environment in terms of interest rate, they're going to fall. You go look at despite all the trouble in the world, energy costs are almost flat. You can't ask for a better environment, but we now need to capitalize and move forward.
Yeah, it's interesting that you talked about that extension as far as the 15% corporate tax rate is concerned for new manufacturing facilities. And of course, this has been part of the wish list that's been sent in. But I do want to address the issue of jobs, because we heard there from Mr. Puri, we heard from Sanjeev Bajaj, and you said it as well, that industry is feeling confident, industry is buoyant, private investment is picking up, capacity utilization, if I take a look at different sectors, is now 80-85%. So where are we going to start to see the jobs coming in from? Are we now on the cusp of significant additional capacity being set up, or is it continued to be across different sectors in different ways, Mr. Mukundan?
See, the jobs is a general issue you hear anyway when you meet people in the community. But when you meet the industry, they talk about skilled workforce. There's a shortage. So what we are saying is there's a mismatch. We need to bridge the mismatch. And the only way we're going to do that is focusing even more on skill building, that the people who need jobs can get the right skills to come and work productively. I think that's the thing we need to solve for. The framework exists, but how do companies take this up more vigorously, as Sanjeev said, is one of the key issues.
Okay. CB, I want to come to you now and address the issue of what you believe the finance minister is likely to take up, or what is likely, what is feasible. And one of the big concerns, or one of the big questions in everybody's mind, is that whether there will be any change as far as the capital gains tax regime is concerned. I know we have a lot of tax experts here in this room as well, but CB, what's industry's expectation? What's industry's view on this? You just have to put the microphone closer to you.
Yeah, thanks, Shri. No, I think on capital gains, what we have actually said is basically for simplification. There are a number of rates, it's much complex at this point in time. So our suggestion has been mainly around, a recommendation mainly around simplification. But that's as far as capital gains is concerned. But really speaking, our focus has been much on certain areas, which is taking it on from there. There's a lot being done on decriminalization, a lot being done on ease of doing business, but I think there needs to be much more focus on decrim, especially for the small and the mid-sized companies. That's one. Second, we've also talked about something, which is like an ease of doing business, the national single window scheme, say, for instance, that really becoming much more of a single window in terms of the states.
We've talked about this previously as well, over years and years and years. Does it matter whether you have a central level single window? Because at the end of the day, most of your regulatory approvals, your licenses, etc., come at the state level, and a lot of states have actually moved on single window clearances already.
Yeah. A lot of states have moved on single window clearances, but there are a lot more to be done at the state level, and the issue is state level. And so, therefore, a lot of our reforms today are also at the state level, whether it is power, land, labor. So we've also talked about really this budget giving a roadmap gap. Much of it cannot be in the budget, but even a sort of a signal on how the GST-like collaborations that has happened with the states could be even taken forward in these areas. These mean a lot for when we hear Mukundan talking about jobs. Jobs are really going to come from the mid-size and the small companies, and unless we make it easier for them to operate, we are always going to see that lag. So lastly, I think, staying on the jobs, we have suggested something like you talked about PLI, we've talked about an ELI, an employment linked.
And this is not the first time CII suggested an ELI. So you're hoping that this time around the finance minister will take that forward. But I will come back to the ELI question in just a second. But let me go across to Vinayak Chatterjee because Mr. Mukundan also spoke about how, and Sanjeev spoke about the fact that government capex should continue.
Government capex, private capex, tax stability, and perhaps doing something for the Aam Aadmi, for the common man as well. More money in the hands of people, perhaps better and bigger FMCG sales. That and a lot more. That's a big, big event on ground underway, and we'll keep dipping in and we'll keep getting you more snippets. For now, just back to the markets as well, where there's been an interesting recovery on the banking side of the screen. Otherwise, I mean, the first half of the day looked very, very different. But now banks have found some stability. So the best case is we're at least looking at a flat screen. And that's translated into a recovery on the Nifty as well. Pull up the bank Nifty. And that kind of explains what's going on. But otherwise, folks, it's more about the broader markets. Of course, this is Closing Bell. I have Nigel as well as Manglam with me in the studios today.
Well, that's right. From the broader markets, quite a few stocks are moving around. Just to highlight a few of them, NBCC, the stock saw some kind of profit taking the last couple of days. Now it's bucking the trend yet again. But the two stocks, where you're hoping that there will be an avenue of raising cheaper capital or cheaper cost of borrowing, that will be Hudco as well as IRDA. In the last 1 month or so, both those two stocks are up, I think, 25 to around 30% or thereabouts. So you should just pull both those two up. Today, this one's up close to 3%. IRDA, I recall we had a chat with the management at around 200, early 200 odd. Today, the stock is at 275. All this in a matter of 10 days or so. So it's a big uptake that we're seeing. Today, it's up 12%. Pull up a little wider time horizon, you'll see that stock's doing well. And JTL Industries as well. Earlier today we had highlighted that those numbers in a challenging environment look pretty okay. The stock, remember, has seen a sharp correction from the recent peak, but we'll have to keep an eye out on whether or not they can come up with the money in the QIP, as well as converting some of those borrowings that were taken around 270 rupees. So that one for the time being as well is moving to the high point of the day, Manglam.
Yes, Nigel, I'm just looking at the way there has been a recovery on the Nifty bank in particular, and there were signs for that as well. The biggest reason why, one was seeing some sort of recovery from the lows on the index towards the expiry is because it is the weekly options expiry. Secondly, in a market which was slightly more volatile, we had the India VIX, which was cooling down in today's trading session. In fact, after a big rally in the earlier 3 days of the week, the India VIX is actually down by about 2.5%. And the mid-caps, all through today's trading session, the mid-caps never gave up. The advanced decline ratio, the crisscross lines will come up for you. There was no crissing or crossing today. In fact, the mid-cap index is at the high point of trade. And the distance between the green and the red lines was maintained throughout today's trading session, telling you that there was some support at the lower levels as well. So, short point, yesterday's low of close to around 24,150 and today's high of close to around 24,400 is the range that everyone's looking at. And in that range, we have a bunch of stocks which are doing well. What's interesting about the Nifty Bank, however, is that this entire recovery has been led without HDFC Bank. So if you look at the stocks which are doing well right now for the Nifty Bank as well, we have ICICI Bank, Kotak Bank has recovered, SBI has been doing well. But HDFC Bank still in the red by about 10 rupees.
HDFC Bank, just one quick point here. The stock has nearly corrected 10% from the peak that we saw, when everyone was talking about that MSCI reaching. So clearly, there was a pre-positioning that was seen out there. Explains why the stock, this is today's chart. You just pull up, say, the last 1 week chart. You'll see it went to a high of closer to around 1,800 rupees. And from there, the stock has corrected close to around 10%. The largest weight on the index with 12% weight. That's seen a sharp decline. How do you position yourself, though, in the final hour of trade? We have Mitesh Thakkar, who joins us to tell us exactly that. Hi, Mitesh. Good afternoon and good to see you. What's your view on the Nifty first up? If you buy those dips on a day-to-day basis, you're making money. Should you square it? Because, the next day, again, you're getting that chance to dip. And it seems they were a bit in a bit of a range. So your trade on the Nifty first.
So, Nigel, two things. One, I think, very clearly, while the dips have been bought and we haven't had any continuation of the declines, I think this time, since at least yesterday, after the dip was bought, we didn't see a new high or even the previous high being attempted. So I think I still believe that this is a market which might be more of sideways and, trending. It's already had a good rally, and now I think is the time when it will just consolidate for some time. But the level which has been tested again and again is 24, 180, 200 zone. As long as that doesn't get violated on an hourly closing basis, it should be okay. But in case we go below that, then I think I'll be worried. On the stock side, Sun TV is something, which is making a fresh high after consolidation. So buy here with a stop at about 794 and a target of 835. And the other one is Balrampur Chini, I think is trying to break out. This is a conditional buy above 449, 450 with a stop at 442 for targets of 470.
Big move that we're seeing on Sun TV. But, just before we move on, I want your thoughts on two stocks in particular. One is Polycab. Polycab too has been doing extremely well. Now it's, moved higher at the high point of trade, almost 3.5% up move. And Trent is the other one. Trent continues to move higher today as well at the high point of trade. So do you have any view on these two stocks, Mitesh?
Trent is something, which has done very strong up move in the last many weeks, I think many months. In fact, the trend is still continuing. I don't have any view on trend in the sense that it's done all the targets which we had last was around 4,900, 5,000 levels. So difficult to take a view. I think once we get a consolidation, we might get a fresh entry point. Polycab is trying to reverse after a decline in the last few days. I think it will face that big gap down which happened, on last week, Friday. I think that will be a very strong supply point. So around 6,800, 6,850, I expect this bounce back to peter out, and we will see supply emerge again at those levels.
Okay. Got it, Mitesh. Thank you very much for the trades today. We'll come back to you a little later and get some final calls in as well. For the time being, of course, I think we will have Deven join in the next couple of minutes. We'll talk about, of course, the market fundamentals as well. A couple of stocks in focus. Of course, it's going to be all eyes on TCS in the next few hours, probably less than an hour, around 3:30 to 3:45 is when the results are expected. But before we talk TCS, Tata Elxsi flagged off the season on a bit of a cautious note. Now, this is because while there was top-line growth, the margin performance was not up to the market's expectations. We've got Rima with more analysis around this. Rima.
So Tata Elxsi's reported a mixed quarter. The top-line growth at 2.4% sequentially is better than street expectation, though EBIT margins have come down. EBIT margins have declined by 150 basis points, but that's largely because of a one-off. If you strip that out, the adjusted margins are actually up. This time, growth for the company was driven by the transportation vertical. Media was flat, just about 0.5%. Healthcare vertical was under pressure. But the concern for Tata Elxsi is the valuations. Valuations are high, 47, 48 times forward multiple. JP Morgan has also cut earnings estimates post the Q1 numbers. They're saying due to higher tax rate, as it's coming out of a tax holiday in some of its SEZ units, they have reiterated their underweight call. Morgan Stanley says high ask rates, premium valuation, and limited upside triggers keeps them underweight. So the numbers perhaps are not exciting enough to offset the concerns surrounding high valuation.
Right, Rima, thanks a lot for that. Let's welcome Deven to the show as well. Deven Choksi joins us. Thanks a lot, Deven, for joining in. Good afternoon to you. The IT pack, that's going to be in focus ahead of TCS's results today. Then we have HCL Tech tomorrow. Next week, we'll have Infosys. And Tata Elxsi is what Rima just spoke about right now. What are your thoughts and what are your expectations?
Yeah, good afternoon, Mangalam. Well, on the one side, I think the mainframe IT companies are basically wanting to shift their focus largely to the computing side from the coding side. So that's one narrative I think that we would like to see how it gets played out and how exactly this is being spelled out by the respective companies, be it TCS, be it Infosys, and others. Obvious and important it is that this particular computing side of the activity is going to possibly be a long-term game going forward as well, because majority of the corporates are basically, I think, now positioning themselves for Web3 environment, and as a result of which, I think adoption of the computing environment to the cloud is going to be a major reality. On the other side, I think that adopting the newer technologies like AI, I think is a demand which each and every corporation is basically asking for. So all the clients of the likes of Infosys, likes of Tata Consultancy Services, or many others, I think they definitely, I think, look for their service providers to have these facilities coming up from them. Maybe one would like to also see the change in the business model that many companies will probably start announcing going forward, wherein the platform as a service, I think, which is going to be the new reality in many IT companies' case. So wait and see how exactly this company spell out. But as of now, as it reads from the company's numbers, maybe I think around 12 to 15% kind of possible growth that one could see, given the kind of large contracts that these companies are winning. Coming to Tata Elxsi, yes, I agree that I think the risk is on the execution, because on one side you have large potential from each of the verticals, likes of transportations, likes of communication media, or for that matter, even healthcare. And in each of these verticals, I think probably the execution part is really, I think, challenging, because at times when your customer is not giving you the orders immediately, probably I think that visibility for execution comes in the way. And then comes, I think, the valuation question mark, because most of the companies, I think in mid-tier IT segment as well, are putting at a significantly high amount of premium, particularly ER&D companies. So to a greater extent, I think if this premium has to get adjusted, then the growth will have to follow. If growth does not follow, then probably I think the premium valuation will have to come down. So this is what the classic case, I think, which is happening with even company like Tata Elxsi. Nothing wrong fundamentally, as I see, but the fact is that I think the valuation re-rating or de-rating is happening at this point.
Got it. Okay, so that's perhaps Tata Elxsi and the expectations from TCS and Infosys and the like. Devinay, good afternoon. I want to talk to you about two titans from the BFSI space, and both seeing very interesting reactions from the market. One is this consistent underperformance of HDFC Bank. Even this FPI headroom news, even that couldn't fire up the stock. Maybe that has something to do with the business update, and we'll discuss that. But the other is Bajaj Finance. Bajaj Finance did show a 30% growth once again, but the stock has not, gone back to its earlier glory above 8,000. How do you look at these two, and specifically how the market's reading into the business now?
Yeah. Good afternoon, Sylvie. Well, I think as I see it, I think both these companies remain fundamentally absolutely very well convincing. HDFC Bank on one side probably I think is talking about growing the size of the AUM from 25 lakh crore to 50 lakh crore in a span of around 4.5 years time, which means I'm assuming about 20% kind of a growth, which is significant. And it would not be very surprising either, because given the kind of force that the economy is assuming today in form of implementation of infrastructure, in form of, I think, implementation of Make in India programs for industry, I would think that I think the demand for credit would be on rise. And likes of SBI, likes of HDFC Bank with a larger balance sheet certainly deserves to be, I think, one which will be approached first for the funding purpose. So I guess I think the fundamentals remain intact. What they probably lack at this point of time is a conviction coming out from the fintech adoption, which is not happening in this company's case, which the investor wants to see. Sooner it happens, maybe I think you will see, I think, a different kind of a rating for HDFC Bank, as my understanding is. Coming to Bajaj Finance, 30% plus kind of a CAGR growth in the AUM continues. However, the stock is remaining neglected, despite of, I think, the value proposition that they are offloading in form of Bajaj Housing Finance. Still, I guess, I think this stock is neglected. But why it is so? I think often it happens when the market participants are busy chasing the narrative and giving crazy values, I think, to those companies which are in short supply. That's where I think the most of the money is channelized at this point of time. And that is why I think they are neglecting some of the quality names like Bajaj Finance. But it cannot continue for long. Maybe soon the wisdom will prevail. And I think you will see the larger part of the money allocation coming to some of the quality names, I think, which we are talking about.
All right, Devin, thank you so much for joining in, giving us your view on the IT stocks as well as the banking pack right now. That covers a large part of the market itself. So we'll leave it at that. But not before the news that the Nifty banks actually moved into the green. The Nifty bank is now up 100 points and a lot more from the lows of today's trading session, almost 600 points from today's low. And it's been led by Kotak Mahindra Bank. Kotak Mahindra Bank has actually moved to the high point of trade. No other large Nifty bank stock has actually moved into the high point of trade. A lot of them have seen recoveries from lows, but this is the one which is actually leading from the front right now. What we'll do is take a short break, a quick break, but before that, an important programming note. Will the RBI cut rates this year? Is the RBI worried about a bubble in the stock market? Is India poised for a GDP upgrade? All those questions answered later in the day. A mega CNBC TV18 exclusive, the definitive RBI governor interview. Only on India's most watched business news channel, CNBC TV18. Stay tuned.
Well, let's get straight then to an exclusive. Sources are telling CNBC-TV18 that Vedanta is likely to launch a QIP soon. Sudarshan joins us to fill us in with more details. Well, Sudarshan, it's going to be an interesting one, right? Mr. Agarwal has been negotiating with bankers for the last, I think, 12 months or so. Now he's saying, I don't need you all. Look at the stock price. Let's take advantage of it. Let's do a QIP. Go ahead, fill us in with details.
That's right. So in the last two sessions, if you see, Vedanta's stocks has fallen almost 5%. Now we understand from our sources that Vedanta is looking to launch its QIP, and it's going to be of rupees 8,000 crore, or say $1 billion. Remember, on June 21, Vedanta's shareholders had approved fundraising for up to rupees 8,500 crore. And earlier to that, in the month of May, Vedanta's board had given go-ahead for the fundraising via equity issuance or via other financial instruments. Now, with all the approvals in place, we understand that company is in talks with bankers to launch its QIP, and that will be at the earliest, might be in the next few days. Now, if this QIP takes place, this will be an equity dilution for the second time in last 1 month. In June, promoter had sold 2.6% equity via block deals at a price of rupees 427 per share, and since then, stock has jumped almost 9%. And this year, in 2024, stock has risen more than 73%. And Vedanta, in its reply to CNBC-TV18's query, says, as a company policy, it does not comment on market speculation.
All right, Sudarshan, thanks a lot for that. So we will keep an eye out on this development as it progresses. But we have Sudarshan's news piece as well as the company's announcement to that as well. While Sudarshan was talking, the Nifty moved into the green, and that could be entirely attributed to the up move that we've seen in the Nifty Bank. And alongside that, we have seen some traction in the IT pack as well. Ahead of numbers, we have TCS, which has moved higher. LTI, Mindtree is the other one that should come up for you, up around 1.5% from the lows itself. So as you can see, a smidge higher for the IT index, a lot more for the other indices as well. And as a result of which, the Nifty, the Sensex, the mid-cap index, which has been doing well already, the Nifty Bank, all of them doing a lot better, currently near the higher end of today's trading range, back in the green for Nifty. Good time to get in Ronak Onkar, the co-fund manager of equity and head of research at PPFAS Mutual Fund. Ronak, always a pleasure speaking with you. The market's been moving higher. It's very interesting because the kind of frenzy that there is in, people chasing ideas, themes. What do you think? What do you make of what is priced in already? And whether there would be any sort of, expectation of fulfillment of those prices?
So interesting phrasing, Mangalam. Expectations are at a fever pitch. I don't think there is enough earnings growth that can materialize to meet all the expectations in all the sectors. But this is a feature of the market. It happens at times when people get overexcited about various sectors and various themes, and they keep discounting the future growth into the near term. And that's when you have to be more careful in terms of not chasing that narrative. And you have to evaluate every situation independently and see whether the growth expectations can be met, or even whether that is the kind of valuation that the business or the sector deserves from a cyclical point of view also.
Hi, Ronak. Good afternoon and good to see you, Ben. Just to confirm, your cash positions, I think they were at around 15%. It continues to hold around there?
Hi, good afternoon. The cash positions are around 16%. They haven't moved materially. But we have accumulated a bit of cash.
But you'll have?
We have a bit of cash, which is more than what it was last.
All right, little higher. Got it. Ronak, suddenly the regulator has turned its attention to the markets. Various soundbites are coming that maybe it's time to be quite rational. Don't get too excited with regard to the party. If that is the case, I'm just looking at some of your, what you'll have in your portfolio. It seems some of these stock market plays, you'll have been reducing some stake. If I look at UTI, AMC, Motilal Oswal as well. Tell us more about that.
So with capital market related entities, the intermediaries like stockbrokers, AMCs, they have tremendous operating leverage if you see the business model. When the market goes up, the volumes go up, and the earnings profile of the business also looks dramatically different from a normal market or even a bear market. So you will see them cyclically high in terms of their cash flow generation, their profit generation. And at that point in time, if there can be a reversal in that trend, then you will see the operating leverage working against them. And you will see that the cost will not grow dramatically, but at the same time, the revenue and the profits can fall quite dramatically. So it's better to be cautious when you're looking at cyclicals which are dependent in capital markets, will depend on the valuations of the market. And that's the reason we have been reducing them. They still hold a little bit of position in the portfolio, but we have not completely sold out.
Okay, got it. Just one more thing. There are a few companies, though, that you'll have gone and added some position. ITC, I recall, we had discussed it long time ago. You all were very early in there. But you'll seems you'll have come back to the addition phase, because on ITC, you'll have added positions over there. And the other one that I've seen, on a month-to-month basis, there is a sizable addition is IGL. Both those two, the CGD companies. So tell us more on that front.
From ITC's point of view, the business model remains the same. It is just a valuation that it became a little bit more reasonable for us to add, and we thought it's a good time to a little bit add since we also have cash. And it's been performing well. The numbers speak for themselves. And in terms of IGL, if you look at the overall adoption of the gas as a source of transportation or even piped natural gas at home, it's been a trend which has been growing for a long period of time. And despite the fact that we are looking at EVs coming in, we are looking at commercial vehicles going towards battery-operated vehicles, it might be a trend which will be slow to be adopted rather than going to happen next year or the next 5 years. It's going to be a long-drawn trend. And meanwhile, you will need alternate fuel sources, the traditional fossil fuel sources. So within that, it seemed reasonable to own a company like IGL, which is a good distribution network in Delhi.
Ronak, hi, great to have you on the show. Coincident, just a couple of hours back, I was reading Neil's tweets, and then I realized you're coming on the show, so I think it's perfect timing, right? I think those tweets have caused a fair amount of flutter on Twitter, on X. We'll put them up in just a bit. For the benefit of viewers, I just want to, read this out. Neil Parekh, who's, of course, the big boss, the head of PPFAS, has just said, wow, the sheer number of NFOs launched, especially thematic funds, is a bit scary. Be careful, guys. Context, yesterday's inflow of 40,000 crores plus saw over 20,000 crores come in from thematic funds, sectoral funds, and a lot of it is NFOs, because that's the only place where mutual fund houses can innovate and launch new products. Everything else is watertight. Neil then goes on to say, we're staying away from excesses, are mindful of starting valuations, and also have some cash. We're happy to underperform in such markets. Not a bad time to slowly redeem if you need money in the next couple of years. So that's a big statement to make, right? And from the head of an AMC, or maybe from his perspective, he can make that statement. How difficult is it for you to execute it? I mean, underperformance, not deploying 16% cash, starting to sell off these high flyers like the capital market related plays. Just give us, your construct, your thought process around this, and throw in a word on some of these areas like, CapEx, PSUs, defense, etc. as well.
So underperformance is a guarantee. It is not something where you can get away by underperformance. And at different points in time, different styles of investing work. What we have been choosing is more of a value-oriented approach where we will not chase valuations. We'll go where the valuations are reasonable and sensible. And if we don't find them to be sensible, we are happy to stay in cash. And as a result of that, we'll underperform temporarily when the market froth is there. So Neil is absolutely right. We're all in sync about this, and we try to caution our investors not to get too carried away with narratives. Even though they might be good themes or the good sectors to invest in, it's also important to get the entry valuation right. You cannot just chase any story without having any substance behind it. From that point of view, the valuations, the portfolio allocation remains the same. You mentioned about PSUs, you mentioned about the power infrastructure companies. All these companies are part of the portfolio because the valuations are reasonable. Despite some companies in that sector have seen stratospheric valuations, these companies have not seen that. And these are more reasonably priced, dividend-generating, cash flow-generating companies, which don't change dramatically overnight. So we might miss a few great opportunities to invest, which is fine, as long as we keep the money safe.
All right, which is what brings us back to where we started. Which parts of the market where you think, the valuations have run up much ahead of the earnings that you believe that they can deliver? And what still seems reasonable if you had to, allocate fresh 84 rupees off the 100 that you're getting right now, because 16 you're holding in cash?
And also, if I could just add to that, Ronak, also, what else are you taking profits from, apart from capital markets, where you're thinking the party is over, it's time to get out? So tell us both, where you'll deploy, what you'll buy, and where you'll exit.
So Mangalam's second question is easier to answer because we have been adding some of the IT services companies and banks, private sector banks that we own. wherever valuations are reasonable, we are adding and topping up the existing positions. Nothing new has been added and nothing new has been sold. So we have been only selling the capital market related entities because bulk of the portfolio, even though the prices have gone up, the earnings have also caught up and the valuations are not extreme. So yeah, we constantly keep a look at the valuation. That's our job, and we make sure that we only trim when the valuations look really frothy and unsustainable from a growth point of view.
All right, and I think the two banks that you were, loading up on was HDFC Bank and Kotak Mahindra Bank, right?
Yes.
And HDFC Bank, it appeared that it's getting ready to fly away, but then suddenly it's pulled back a little bit. I think the stock doesn't like too much of excitement. It's down 10% in the last 1 week or so. But we appreciate you joining in, Ronak. Rational thoughts coming in as always. You have upped your positions in ITC as well as in IGL and Maruti. Taken some profits off the table in capital market plays like Motilal Oswal as well as UTI AMC. And you continue to select ITES as well as private banks. Thanks a lot for joining in and filling us in with that quick take. For the time being, though, we'll slip into a short break with news that the Nifty is back in the red. We're down close to around 25 points. We come back. Nimesh is waiting for us on the other side. He'll tell us what he's picking up in Dealing Room Chatter. Welcome back. As promised, let's get straight to Nimesh. He's standing by to tell us what is he picking up in D-Street Chatter. Nimesh.
Hi, Nigel. A quiet day of trade, pretty much in a narrow range since the morning trade. And even the flow seems to be quite muted as well. The sector of the day clearly is oil and gas stocks. All the OMCs are buzzing in trade. And we spoke about that yesterday as well, that maybe there is a bit of buying interest back ahead of the big NFO, which is going to close next week from a leading domestic mutual fund. So that could be one of the reasons why we're seeing a big traction in those names today. Apart from that, I guess the TCS earnings tonight would be a big trigger to watch out, not only from an earning perspective, but for the overall IT stocks as well. So that's big number to track. But frankly, it's been a quiet day, so to speak, and even the volumes seems to be slightly muted.
All right, then let's get stock specific, Nimesh, because broader markets, there is a fair amount of activity.
Well, absolutely, and that's where a lot of broader market mid-cap stocks are buzzing in trade. So the first name is MSTC. After a long time, this stock has come into my charter list. Big buying interest in that particular name, surprisingly from a leading domestic AIF, and that's the reason why we've seen a big move in that name today. So that's the first name. Second, two stocks where there is delivery-based buying, Grasim and Interglobe Aviation. Both are seeing very strong buy flows at the leading FIDs. So it looks like some bit of institutional interest is back, and so expect high delivery volumes in both these names today. The third stock is Ambuja Cement. Nigel has been highlighting the Nomura note since morning. A big upgrade on that name. They've raised the multiples as well. But interestingly, in Ambuja Cement, I understand a leading long-only fund is an active buyer as well. So there is accumulation happening at these levels from a leading FII. And the last is TVS Motors. There were multiple block deals in today's market, so disclosures would be quite interesting. But I understand potentially a leading FII was a likely buyer in today's block. Also, the company has launched some new bikes as well. So that seems to be exciting the stock. So I guess disclosures will be quite interesting in TVS Motors today.
All right, we take that point. Nimesh, thank you so much as always for joining in with some dealing room insights as well as individual stocks. Speaking about individual stocks, a couple of them actually now spiking. GMR Airports, for instance, one big move is what we've seen on that one, has moved higher. Alongside that, Asian Paints continues to do well. Yesterday, in the second half of trade, the street was excited about the paint stocks because there was an increase of 1% in the economy segment of the paints, telling you that there is demand and it's strong enough. And this morning we had a Macquarie note as well saying that one of the reasons why the companies have gone ahead and increased their prices is also perhaps because they would have sized up what competition had to offer in terms of Birla Opus, and more importantly the reviews so far have been mixed. So interesting disclosures and interesting times ahead for this paint space. As of now, up about 1% at the high point for Asian Paints as well. Good to bring Mitesh back in to tell us the tomorrow trade. Mitesh, what does one buy today for a reverse trade tomorrow or otherwise?
My sense is that I think, the overall market will be sideways. Therefore, we've been consistently suggesting to avoid trading the indices and trading stocks. And on the stock list, I have a BTST and Voltas with a stop at 1500. Look for targets of 1540 here. And after a long time, there's signs of some correction happening on the charts of KBB. So we'll take a STBT here with a right stop at 85.20 for targets of 8400.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on Ambuja Cements. Nimesh briefly mentioned that one, so let's get straight to the details then. Nomura, they have gone ahead and they have upgraded the stock. Earlier it was reduced, now they're talking about buy. Earlier the target price was 500, now they're giving it a target price of around 780 rupees. How does this happen? Well, obviously they're more confident on the earnings, and they've also upped the multiple. Earlier they were giving it a multiple of around 14 times. Now they're willing to give a multiple of around 19 times. You'll want the reference of the largest player, which is Ultratech Cement. That trades at a multiple. For that one, they've given a multiple of around 17 times. The reasons, I've divided it into 4 big reasons. Point number 1. Aggressive capacity addition. That's what Nomura is quite excited about. They're saying, including the Penna acquisition, well, the capacity addition is likely to be around 14%, which is much higher than Ultratech as well as for the industry, and they'll be around 106 million tons odd by FY26. The entry into new markets, both these two inorganic growth, whether looking at Penna as well as Sanghi, both of them have limestone, and it gives them their option to go ahead and expand capacity as well. Besides that, the volume growth, even without Penna, they're saying that Ambuja has the capability to do close to around 13% volume growth over the next 3 years. That's FY24 to FY26, and that's better than Ultratech as well as the industry. And finally, cost optimization measures. Whether you're talking about, the management has been talking about synergy benefits, to getting a higher amount of domestic coal, even alternative fuel resources. Put all that together, they are penciling in that the operating cost comes down by around 300 rupees per ton. And for the time being, the stock is up close to around 2%. And one more record that Hormos tells me is that for this month, every month, the stock was higher. Till yesterday, it was down close to around 1%. And now it's maintaining its winning streak. So the 7th month in the row that Ambuja Cements is higher for this particular year.
Okay, all right. That's Ambuja Cements doing well throughout the course of the day today. That's Ambuja reacting to news. Let's get back to earnings. And it's going to be all eyes on TCS very, very soon. We are expecting the results to come out anytime after 3:30, between 3:30 and 4. And the IT bellwether is expected to show decent top-line growth and perhaps growth that will be better than at least the previous couple of quarters. We have Rima with a heads up.
TCS were expecting a modest improvement in their revenue growth, 1.3% on a quarter-on-quarter basis in dollar terms. Constant currency revenue growth is up 1.5%. Now, typically Q1 is a seasonally strong quarter. There is a ramp-up of large deals like BSNL. All that will aid the top line. And revenue growth this time will be better than what we've seen in the last couple of quarters. Margins will come under pressure, down 150 basis points according to our poll, because of the wage hike, and that puts pressure on the company's profitability. So the CNBC-TV18 poll is seen down close to about 3.5–4%. TCV might be low. TCV stands for total contract value. That's the deal wins, and that could be down quarter on quarter compared to Q4's bumper number of over $3 billion due to the absence of large deals. Now, what's the street going to track? They're going to track on the pace of recovery. You know, there is hope that things pick up a little bit at least in the second half of the year and then accelerate in FY26. Is there anything in the management commentary which gives confidence regarding that? You know, I've compiled what the street expects from TCS in FY25 and FY26 in revenues and margins, and that will come up for you. You know, the street is expecting about a 5.5% revenue growth this year, accelerating to 8–9% next year. Margins too are likely to improve this year and in the following year because the employee wage bill has been coming down with the companies hiring less and less and attrition coming under pressure. So the pace of recovery, is there scope for margin improvement over the next 2 years, which the street is hoping for? I think they want evidence of that in this quarter's numbers. Other than that, you will watch for things like hiring, generative AI, the pickup over there, what the pipeline is looking like. And even, you know, if there is any increasing competition coming in from global captive centers.
All right, take that point, Rima. Thanks a lot for that. As we slip into that short break, a couple of stocks doing well. Tata Motors has moved higher. BPCL is the other one, which has now moved to the high point of trade. We had HPCL do well all through today's trading session. The Nifty just above that flat line into the green. Take a short break. More market talk on the other side.
Welcome back. Well, just about 7 minutes to go before the day closes out, and most of the indices are turning green. So let's see if we do get that green close. Well, today we caught up with Sameer Arora, founder and fund manager at Helios Capital. He spoke quite extensively on expectations from the budget with respect to taxation. Take a look.
Market is up this year 18% or something. So they are not subdued, but obviously this is the budget month. And last month was a strong month. So it's okay for everybody, including us, to wait. F&O side, the thing is that it looks a bit justifiable because although the only objection somebody can have is this is my money and how does it matter to why are you restricting an individual if he has the money? But this is how systems and regulations work, that even if it's your money, you are guided. For example, if Singapore residents want to go to the casino, they have to pay an entry fee, which is not there for tourists. So somebody can say, I am living in Singapore, I will pay why do I need to pay? And others don't. In everything you can see in life that it is there, because if it is too blatant, too obscene, too different from the world, and looks very speculative, then a little bit of checks and balances, okay. It doesn't matter that it's your money. Many positions we must have trimmed or added, but in the big picture sense, my net exposure, my long short fund used to be 74-75% going into the polls and exit poll and all that. And I want to reduce it, and have reduced it quite a bit to in the high 60s.
Okay, keep an eye out on the markets. We're seeing some bit of a pullback from the low point of the day. Explains why now we're up close to around 15 points. The Nifty Bank has done well. Your portfolio is feeling good, I'll tell you, because the mid-cap index, that's doing far better. Ambrish Pallikal joins us to help us out with a couple of ideas. Ambrish, you tell us, which is that one pick that you want to give us today?
Hi, Nigel. That pick is Time Technoplast.
Oh.
It's a prominent global player in polymer goods, although it's a small cap, but then it's a global player. They have operations in US, Southeast Asia, North Africa, UAE, as well as India. Nearly 30 locations and 40 production units. And they manufacture composite cylinders, which are used in CNG, LNG, industrial packaging, automotive components, lifestyle and material handling products. The focus now is on the growth. So they're talking of 15% CAGR, at least over the next 3 to 4 years. And the other focus is a reduction of debt. So basically, they want to become debt-free in the next 2 to 3 years. So my expectation for FY26 is about 24 rupees EPS. And with this, my target is 432.
Okay, so Time Techno is the stock on your radar. Ambrish, anything else? I know I can't even ask you for a budget pick, right? Because all these picks have been running for over a year now. But anything else? I mean, there's a lot of chatter about perhaps focus on specific areas, R&D, sunrise sectors like green hydrogen, EV, etc. Any individual names that come to mind?
In fact, a budget pick itself, which is Easy Trip Planners, has been my favorite for a while. I mean, we had one good run. We booked some profits. It's come down now back to the levels at which we had gotten. So again, recommending this with a target of 62. Basically, it's the largest, second largest online platform with more than 2 crore customers. And they've also got into offline now. I mean, they have 61,000 agents. They have started their operations in UAE, UK, and Thailand. As far as the offline is concerned, in Pune, they have got a new store recently, about 12 stores totally in India right now, and that should go up. I think the stock had corrected because of the Q4 earnings, where they had a write-off because of the GoAir dues. But then I'm looking at a CAGR of about 30% over the next 3 to 4 years as far as revenue goes. EBITDA CAGR should be about 24%. And from a budget point of view, I think clearly the focus would be on tourism in India. And that should help this company to a large extent. At the same time, I expect some more cash in the hands of the middle class. And typically, when they have more cash in hand, I think nowadays most of the people plan a trip. So this again should be the other benefit as far as EasyTrip is concerned. So buy at these levels of 41.
I think even if, Amrish, even if people don't have additional cash in hand, they still, plan a trip. I think that's where all the financiers also come in. But yeah, I think Nigel and I planned a trip. I didn't have any cash in hand, but I planned one nonetheless. I don't know about Nigel.
I'm still reeling under pressure. I traveled last month and, credit card bill is hurting me now. But anyway, it's as my wife says, we're going to create memories. So we created that memory. All right, Amrish, I wanted to ask you about these low P, high free cash flow companies. Some of these names, PSUs in particular as well. I believe there's a new fund that's coming out which maybe could be looking at these. Could you explain why in the last few days you have some of these stocks, Coal India, ONGC, Oil India, all of them are doing quite well. Any of them do you like? All of them actually in this week itself have seen a big up move on good volumes.
Yeah, I mean, it's quite difficult to find stocks which have low P in a market like this with good cash flows. So something like a Coal India, yes, I think it's consolidated well and possibly should move to the next level from here. So, I mean, we could see a move of either at least 60 to 80 rupees from the current levels.
Okay, all right. Amrish, I think we'll have to wrap it up on that note today. Shorter chat, but thanks very much. Always good getting some perspective on these individual picks with you. Well, with that, we are almost out of time. So last 2 minutes to go to close out what's actually turned out to be a good session because now all the indices are in positive territory for what it's worth, including the Nifty. 24 up on that index, and the recovery has happened because there was some repair job on the banking side of the market. Not all, but I mean, the divergence really helped other names like SBI, like Kotak Mahindra Bank. They've done better, even Axis for that matter. They've done better than HDFC Bank, which is where the problem continues to be. So the screen is green. I'll start with the green side. The big PSU boys, ONGC, Coal India, BPCL, they were the big leaders today. Some good buying on Tata Motors, on ITC, on Asian Paints. Already mentioned the gaining banks. And then actually even Hero MotoCorp was up and about. Titans. I guess there's quite a bit of buying on the so-called consumer side of the screen today, going beyond FMCG. The losers, FMCG, Pharma was out of favor today. Most of the names like Divi, Cipla on the lower side, and Tata Consumer down about 2%.
Well, there are hopes of divestment getting into the budget and some talk on that front. SCI locked in upper circuit, 20%. I think midway through the trading session, you couldn't trade it because it was locked. SCI Land and Assets, well, that was up another 15%. IRDA, valuation-wise expensive. Street seems to suggest that maybe there's a bigger story playing out here. Stock up more than 10%. EIL, how do you justify these valuations? Street believes they can. The stock is up closer around 10%. Gujarat Pipavav up closer around 8%. So quite a few of these names did very, very well. And the reason I'm highlighting these stocks is because they moved up on massive volumes in today's trading session. Just a quick word. I think we should get Gokul Das exports in the last 3 minutes or so. Massive block takes place. More than 40 lakh shares getting traded out there. And I think it was at a price around 950. So we'll have to check out to see who were the buyers on this one, who were the seller, but it's going to be an important one out there. And one stock that's come back to life in this week, which we had highlighted earlier this week as well, is ITC. It's moving from strength to strength, playing catch up with some of its peers, and also valuation-wise, still a little bit palatable.
Absolutely. So those were the winners of the day, and largely a good day for the street. With that, it's curtains on this edition of Closing Bell. Thank you very much for watching. But we have a big budget exclusive lined up for you, the CNBC-TV18 Budget Town Hall coming up next.